Welcome back. I'm Pratap here. Today is 20th August 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So yesterday we have identified 5 high liquidity zones from daily and 75 minutes time frame. So let's evaluate how many of the trades we got. Even before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the community tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. So click on this link. I'm clicking on the link. Now we are into the playlist supply demand zone price action course. So in this playlist we have 24 lessons are available. From all these 24 lessons we have 62 training videos are available. You just need to scroll down to the bottom of the page to find the first lesson. The first lesson is lesson 1.1. So starting from lesson 1.1, all the lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in the Telegram channel from this video description. And it is very useful to you each time when we release a new YouTube video or any other important updates we will provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones and their performance during today's live market. Okay, out of these 5 high liquidity zones, we got trades from 2 stocks. So total we got 3 trades. Tata Communication we got 2 trades. And Lupin we got 1 trade, and Lupin is stopped out, but Tata Communication both the trades we got a 1:3 RR. So first let's discuss this Tata Communication. Tata Communication is a 75 minutes high liquidity supply zone. So I'm changing the time frame to 75 minutes. Here we have identified a rally, 4 base candles and a drop candle. So if you add the hidden body, this is going to be a drop candle. So this is what our software identified as a high liquidity zone. So we need to identify the order flow in this zone. So for that I'm fine-tuned the zone until the 5 minutes. So 75 minutes, next time frame is 15 minutes. So I have identified 2 15 minutes zones within the 75 minutes high liquidity zone. The zone confluence. We have a rally, we have 3 base candles, and then we have a drop candle. Rally base drop. Here this is the 15 minute zone, and the next one is a rally, again 3 base candles and again a drop candle. So this is another 15 minutes zone, and both the zones I fine tuned with 5 minutes time frame. The first zone, the top one. See here, this is a ERC candle, 2 base candle and a drop candle with some hidden body is also there. But okay, fine. We have a drop base drop. This is the fine-tuned 5 minute zone. Previously prices reached near to this zone, but they didn't go and came down. That means there is a very strong order flow. And when we should plan a trade, if this fine-tuned zone is violated, then we can plan a trade here. But today, this zone is not violated anyway. So here we have a rally, we have 1 2 3 4 5 base candles and again a drop candle with pro gap. Here we have a pro gap. That means there will be a very strong order flow in this area. There could be. Let us see the price action clues also. We got some important price action clues we can observe. See, this is on Monday, yesterday. Prices came very close and then it came down. So this is yesterday's price action on the 5 minutes time frame. So the orders are picked up near the zone and then came down. That means we can assume there is a very strong order flow. And again today what happened? Prices reached near to the, not near, inside the fine-tuned 5-minute zone. See, the prices went inside the fine-tuned 5-minute zone and then reached the target. But target is not a 15 minutes demand zone. Why the target is not 15 minutes demand zone? Let me explain. First, let me go to the 15 minutes time frame. So here we have a drop base rally is there, and this is strongly holding the prices, and then there is a push from here. Why this push? This is what you have to see here from the gap, pro gap. From the pro gap, prices moved up. That means prices are moving away from the demand zone with a gap up. And why there is a gap up? If you go to lower time frame, one more time frame, then you will understand. If you look into the 5 minutes time frame, see here you have a drop, you have a base candle, and then you have a rally candle with a pro gap. And within this pro gap area, whatever the blue color line I have drawn, till that area, the orders are consumed. From there, it is picking the orders and started moving up very sharply. That means in this area, there is a strong order flow. That means this pro gap, the order flow in this pro gap, definitely it will prevent in reaching the prices to this 15 minutes target demand zone. That is the reason why your target should not be 15 minutes demand zone. Your target is the pro gap. Several times in earlier high liquidity zone analysis, during the last 8 months time period, several times I told you, whenever there is a pro gap, you should adjust your target to the pro gap area. Otherwise, you will be missing your profits. So that's why. See, yesterday prices went up to this blue color line area. So what I did, I kept my target at the blue color area. Maybe you can exit a little above or maybe a little below. It's all depending on our risk management. But generally at this blue color area or a little above, we will exit. But do we have RR till this blue color area? Yes, because the risk is high here. This is a high risk zone. A little high, not very high, a little high to achieve our RR. So that's why what happened, I am not able to take the entry exactly at the distal line of this, exactly at the proximal line of this 5-minute zone, because this is a type 2 proximal, already we adjusted. You have to go a little above this proximal line to take your entry. Then only you will achieve. See, now we got 1:3 RR. Suppose if I adjust exactly at this proximal line, see, you are getting 1:2.8 RR. So to achieve 1:3, what I did, slightly adjusted the entry. Somewhere here. And what is going to be your entry now? 1184.35 paisa. Earlier your entry is supposed to be 1184.05 paisa. Another 30 paisa above we moved the entry. You may ask a question, price may not reach up to that. What will happen? Price go a little below and then turns. Yes, you will be missing the trade. Why we are adjusting the entry? To achieve the RR. Without the RR, you don't want to take the trade. If it doesn't reach your entry, anyway you will miss the trade because RR is not there. Even yesterday's video also explained this point. It's a very important. Risk management adjustment is a very important skill you have to build. So that's why slightly adjusted until I achieve 1:3 RR. See, now exactly 1:3 RR is there from this point. Earlier 1184.05 is your entry. Now instead of 1184.05, now your entry will be 1184.35 paisa. So as in this tool, 1184.35, this is your entry price. So that's why this short position and long position tools, this long position and short position, both these tools are very, very important. I already explained these tools in our training videos. I didn't remember the exact lesson number, but one of the lessons I explained. Anyway, and also several HLQ analysis videos, we also used these tools. This is the short entry. So this is the way we adjusted for achieving. And what happened? We got the trade today at 9:15 candle. We got the trade. So some of you might have missed the trades at 9:15. Some of you don't take the trades at the 9:15. But whatever it is, our high liquidity zone given you opportunity whether you take the trade or not. Because many people doesn't trade on the 9:15 candle. At least some people look for 9 o'clock 16 minutes candle or 17 minutes candle. Sometimes even if you take trade at 9:15 candle, before you place your order, maybe slightly, the prices quickly get into the zone and the order flow will be pushing. In fraction of seconds again it will be coming down. Sometimes you may miss the trade. Sometimes. If you are lucky, you will get the trade, but sometimes you will be missing. Suppose if it stayed in 9:15 candle, so at least 30 seconds, 40 seconds, if the prices are stayed, you may get the trade opportunity, definitely. In fraction of a second, if prices come down, your order may not be executed because so many orders will be there in the morning 9:15 candle. So that's why, I don't know how any of your trade is executed at 9:15 candle. Otherwise, it would have been a successful. But whatever it is, our software has given an opportunity, and that opportunity resulted as a successful trade. In case if anybody would have taken a 9:15 candle trade, you would have got a profit 8,425 rupees, which is 4.7% ROI. You might have achieved. Okay, let us assume you missed the trade, or maybe your trade is not executed at 9:15 candle. You got another opportunity again. Here also you have to do risk management. The reason is your 15-minute zone is a new 15-minute zone is created during the live market. See here, you have a drop, you have 3 base candles, and you can consider this ERC as a leg out. Even though it is a failed ERC, still okay because prices are moved away from the zone and also closed above the zone. That way you may consider. But anyway, this is the target point of view. You can call this as a ERC candle as a leg in. These two are the base candles and this is the leg in, leg out. That way you may consider, even though it is not a very good leg out, please remember. But target point of view, okay. After that, why I am considering there is a follow through candle. That's why I am giving importance. If this follow through candle is not there, I would not have considered this failed ERC. That's why understanding failed ERC as a leg out is a skill you need to build. I haven't provided this training yet, but sometimes in the HLQ analysis videos, I am talking about these failed ERC candles as a leg out. In some special scenarios, I've been explaining you. But one of the lessons in the upcoming training videos, I'll be explaining the rules behind usage of failed ERC candles as a leg out. But that takes some time to get into that lesson, because before that some more strategies you have to learn. That's why in the HLQ analysis videos, whenever situation arises, so with these examples I'm explaining you. And moreover, why I compromised about this failed ERC is this is not for the entry, this is for the target point of view. At least this target. Why I have to give so much importance? The reason is the trade is also almost last 1 hour of the trading closing session. So at the time you can't expect a huge targets during the last 1 hour of the trading session. It's better your targets are as much near as possible. But at the same time, RR also we have to achieve. See here, if you take your RR here, you won't get the RR if you take at the proximal line. See, what is our entry? 1186.95. At this price, exactly you are able to achieve the RR. See here, RR. You are achieving 1:3 RR. The adjustment has done. Let us assume you want to take a trade at this type 2 proximal. See, what is the RR you are getting? 1:1 RR you are getting. If it is 1:1 RR, you can't accept the trade. For that, what you have to do, you need to adjust the RR with the help of this short position tool that is available in TradingView. Here you have, already explained, you have a long position and short position. Because it is a short trade, this short position tool I have used. And here the risk management I have to do with the help of this tool. How I am doing? This is supposed to be your actual entry, but I am not achieving the RR. So what I want to do, I want to adjust the entry. See, I can't change the stop loss. I can't change the target. The only thing I can do is entry I can change. I can take a deep entry. When I take the deep entry, I may achieve RR. But what is the risk? Prices may not reach up to the area. If that is the case, you will be missing the trade. Anyway, you will be missing the trade if RR is not sufficient. You won't take the trade, you won't accept the trade. So let's try. Luckily, if prices comes to the adjusted area, you are going to get a successful trade. Otherwise, you will be missing. Anyway, RR is not there. Anyway, you have to ignore the trade. So why can't we take a chance by adjusting the entry until you get 1:3 RR? Many times I gave you these examples. If you take some of the important old videos, you will. I already explained this technique several times. But why I am explaining again and again? Because many new people are joining and new people are again they are listening these videos. I don't want them to miss these techniques because this is experience. How you gain experience? From my knowledge only you will gain experience. So that's why what I am doing, I am adjusting the entry. See, I am moving. Now 1:6 RR I achieved. Further I moved. 1:9 RR I achieved. Further I moved. 1:2 RR I achieved. Further I moved up. 1:2.4 RR. Further I moved up. 1:2.6. Further I moved up. 1:2.78 RR I am achieving. See, now 1:2.9 RR. Further move, slightly if I move, I will achieve. See, now I achieved 1:3 RR. So what is the high of this candle? First of all, what is the entry? The entry is 1186.95. Is price reached today at this level? Yes, it reached. It went up to 1887. See the high of this candle. The high of this candle, you can observe here. The high of this candle is 1887. But our entry is 1886.95. That means 5 paisa before day's high. I mean, not day's high, that candle's high. Before the candle's high, our entry is executed. See, after your entry execution only, 5 paisa more further prices will go up. So definitely your entry would have been executed and your risk is also minimized. And after that it reached the 15 minutes target. In which candle you got the entry? At 2 o'clock 15 minutes candle it reached the entry. And when it reached the target, exactly at 3 o'clock 15 minutes candle. If you look into the 5 minutes time frame, you got the entry at 2 o'clock 25 minutes and reached the target at exactly at 3 o'clock 5 minutes 5 minute candle. That means in 40 minutes your trade is completed. And what is the profit we got? 4,475 rupees, which is a 2.5% ROI. Fine, that is okay. ROI is less than 6%, but if you combine both the trades together, you are achieving 7.2% ROI both together. Because you are using same capital for taking both the trades together. Maybe you might have missed morning 9 o'clock 15 minutes candle, or you might have avoided it, whatever the reason. Still you got an opportunity to take this trade. So before the market close, last 1 hour of the market close, you got the trade and the trade is completed in another just 40 minutes period. At 3 o'clock 5 minutes, he closed the trade. So this is possible with futures or options. Maybe cash may not be possible, because I think cash you need to exit at 2:30 or 2 o'clock 45 minutes. Otherwise, your brokers forcibly will be closing your short trades in cash, intraday trades. But definitely in futures, it could have been a successful trade. So 2 opportunities our software has given today, and both the opportunities turned into successful trades. So this is about Tata Communication, and the next one is Lupin. And Lupin is Lupin is also a 75 minutes high liquidity zone. So here you have a rally candle, you have 1, 2, 3, 4 base candles, and then drop candle. This is what our software identified, this high liquidity. This is a rally with a hidden body. This is a rally candle. This entire 75 minutes again fine-tuned with 15 minutes. Here identified a 15-minute zone, rally base drop and follow through candles. And again drop base drop. In the recent price action, a drop base drop is created here. And again fine-tuned with the 5 minutes time frame. In the 5 minutes time frame, we have excellent rally base drop. It's excellent zone. But this zone is already picked up the orders from this zone. See the good move. And moreover, prices went more deep inside. Next time, can we take a trade is a questionable. But at some point of time, it is looking like a high liquidity zone. Maybe, see here, rally base drop. If you consider this rally base drop, a new zone is created by picking up the orders from this area. Maybe those who want to take a little extra risk, maybe they can plan another trade. Because risk is very minimal. If it is stopped out, you will be missing small amount of money only. Just seeing this price action, thinking it could be a high liquidity, maybe, may not be. It may not be also. Just one possibility. But concern is, previously it picked up from almost, prices went close to the digital line. It didn't touch the digital line, but they went up to the very close to the digital line. But if it is a rally based drop, institutions might have added a new order flow in this area. If that is the case, definitely another trade might be, we may get a successful trade, provided if this is a high liquidity zone. So that's why the only who can take additional risk only can plan for the second trade here. Okay, but before that, here we have another zone is available. Here we have a ERC candle you can use as a leg-in. You have 3 base candles and then a drop candle. This is the way you have a 5-minute zone. So it looks like an excellent zone. But what happened today? The prices went, came down, maybe demand is very strong, again moved up. Definitely it is not reached our target after entering into this zone. See, morning 9:15 candle, after that prices came, not good enough to reach any 15 minutes target. So it is stopped out. You may ask a question, because the supply zone is very near, RR is not there, definitely we would have avoided. It's not the case. See, this candle is not completed by the time when we take a trade. This is an ongoing candle. So definitely your RR could be somewhere, your 15-minute zone could be somewhere here. You have a drop, 3 base candles, rally. Maybe this could be your 15-minute zone. From here you get sufficient RR. Till here prices will come. So that is the reason why at the time of planning your trade, this could be a valid trade. But only thing is, a rally base, rally institutions with this leg out, they created a new zone. When prices are entered into this area, we are not aware it is a leg out candle. Maybe after some more movement it is a leg out. But by the time we already took the trade, So definitely our trade is stopped out here. So you have to accept. You can't avoid this zone. If this candle would have been completed before entering into the zone, and if this is a valid leg out, then next time when prices are entering, because the risk is zone is very close to your entry, risk management doesn't support, you would have avoided the trade. But this is not a valid. The reason is this candle is not completed at the time you take the trade. So this is the reason why. Okay, you took the trade, and after that prices reach this area, you would have exited. But what happened? This zone is violated. So obviously your stop loss is hit. Okay, how much loss we got? We got 1,806 rupees loss, and which is a negative ROI 1.1%, minus 1.1% ROI. Maximum we can expect up to 2% your loss. So it is within your limited, within your accepted, maximum accepted loss. So it's a valid loss. So those who have taken a trade in Lupin, today your order would have been stopped out. Maybe some people may say, this is at the 9:15 candle. Let me go to the 5 minutes time frame. This is a 9:15 candle, you would have avoided. But after 9:15 candle, prices came, and once again prices reached. At the time you would have taken a trade. Let me go to 1 minute to get clarity. You may say, see here prices already in the morning 9:15 candle. 9:15 candle, mostly we would have avoided the trade. If that is the case, our trade is not executed. But later on, see again, this is at what time? This is 9:22 candle. At the time, we would have taken a trade. Because many times what we do, intraday within the same zone, we take the trades in the high liquidity fine-tuned 5 minutes. Because in the intraday, the same zone works multiple times, the fine-tuned zones. See, today we have seen Tata Communication, how it worked, second time also. Previously also we have taken many trades second time also. If first one you have not taken, definitely you would have taken, and immediately after that next candle the zone is violated and your stop loss might have been hit. So anyway, this is a stopped out trade Lupin, and apart from that 3 more stocks identified. They are all daily zones, but let me explain how I fine-tuned. The first one is Bajaj Finance, is a daily high liquidity demand zone, rally, base, rally. These are daily candles, rally, base, rally. And this daily zone is fine-tuned with 75 minutes time frame. Identified a drop, 3 base candles and a rally. This is the 75 minute zone. Within the 75 minute zone, I again identified 2 15 minute zones. So I am changing the time frame to 15. So please verify here. So here you have a drop candle, you have 2 base candles and a rally candle. Again you have a rally candle, base candle and again a rally candle. So this is the first 15, this is the second 15 minute zone. But did you observe this first 15 minute zone I did not fine tune. The reason is the first 15 minute zone is already pierced. Last Friday, this zone was pierced. So pierced zones are not valid. So that's why I didn't focus. Even the recent price action also, you should not fine tune. Once a fine-tuned zone is pierced, that is no more valid. But second 15 minutes is not pierced. And moreover, prices came very close to the second 15 minute zone. So probably there is a strong order flow. Next time when prices are entering, definitely you can plan a trade here. For that, you should have a fine-tuned 5 minute zone. So let me show you how I fine-tuned at the 5 minutes time frame. So this is the one. So you have a rally candle, you have a 3 base candles and again a rally candle. And this 5-minute zone, we can plan a trade. And to indicate there is a strong order flow, the recent price action also has given a important clues. Before this fine-tuned area, the prices again started moving up. That means order flow from here to here is very strong. Definitely next time you may get a good trade. But anyway, today prices did not enter into this zone. This is today's morning 9:15 candle. After that, price moved up only. They didn't move down. So we didn't get a trade in Bajaj Finance. And the next one is MFSL, Max Financial Services Limited. This is also a daily high liquidity demand zone, rally base rally. Have you noticed I didn't fine tune? The reason is the structure of this leg out candle is very bad structure. Let me directly go to the 5 minutes time frame to tell you why it's not really valid. See the 5-minute zone candle. This entire candle occupied this whole thing. Morning market opened, came down and again moved up. Everything happened in 1 minute. Actually, it is a 9:15 candle. Even if you go to 1 minute candle, you will understand the same. The same candle in 1 minute. That means there is something wrong in that price action. So that is the way. I don't want to take any risk in this particular zone. This is the 9:15 and this is the 9:16 candles. Okay, these are the 3 candles together. Here also we don't have any 1 minute zone, proper zone here. So such kind of order flows you cannot accept. Because of this reason, didn't fine tune this zone and not having any plans of taking a trade here. There are higher chances this zone will be violated unless institutions create a new 75, again in that fine-tuned 15 minutes, again in that fine-tuned 5 minutes. If that is the case, in the next retracement you can plan a trade. But at present there is no price action here, so we are predicting this zone will be violated. And the last one is Nifty next 50. Nifty next 50 is a daily high liquidity supply zone, and we have a fine-tuned zone is available, but today prices didn't enter. But how I fine-tuned, let me explain. See, this is a rally candle with a hidden body, rally, 3 base. This is a medium size candle, so part of the base because of these earlier base candles. Then with a gap down. See here, add the hidden body. If you add the hidden body, this is going to be a very big rally candle. Drop candle. So this drop candle is valid for the leg out. So that's why we have drawn this zone. Our software identified this zone. And this daily zone is fine-tuned with 75 minutes time frame. So here we have a 75-minute zone. We have a drop, 3 base candles. Again, you add the hidden body here. The hidden body is going to be a drop. So that's why you can consider this as a drop candle. Drop, base, drop. It looks like a rally candle, but the moment you add the hidden body, this is going to be a drop candle. This is what you learned in lesson 9.3 and 9.4. I explained hidden body and hidden zone concept. Those who did not complete those lessons, please complete. Lesson 9.3 and lesson 9.4. As part of practical lessons, I explained these new concepts. Okay, this 75-minute zone again fine-tuned with 15 minutes time frame. See here, you have a rally, you have a base, and again you add the hidden body drop. So this is going to be a drop candle. Looks like a rally candle, but the moment you add the hidden body, this is going to be a drop candle. And this 15 minutes area again fine-tuned with 5 minutes time frame. Now we have an excellent 5-minute zone. See here, you have a rally, 4 base candles, again a drop candle at the hidden body, you get a very big drop candle. Okay. And why I am expecting there is a strong order flow? See, earlier prices came near to this zone. Before entering into the zone, prices came down. That means in this area there is a strong order flow. Why there is a strong order flow in this area? Because there is a pro gap is there. This is a pro gap. In the pro gap there is a strong order flow. Earlier it didn't consume complete order flow in the pro gap area. Up to here it consumed the order flow. So from here to the fine-tuned area, definitely there will be a very strong order flow. A little above this zone, you can plan a trade in case if you want to consider the pro gap, and if the risk is within your accepted limit, you can take a little above this candle. A little above high of this candle, you can plan a trade. Maybe you can take a type 1 proximal entry, you can take. Because order flow is very strong, may not be reaching up to fine-tuned type 2 proximal entry. That possibility is there. It may or it may not be. So those who are having fear of missing a trade, there is nothing wrong. You can take a type 1 proximal entry, provided the risk is within your accepted limit. And also you get sufficient RR, at least a minimum RR. But today prices didn't come up to this area, fine-tuned area. So that's why we didn't get a trade opportunity in Nifty Junior. But remember this analysis, maybe in future again prices may reach this fine-tuned area, that day you may get a good trade. So these are the high liquidity zones identified in our yesterday's end of the day list. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.